Lucid, just started producing EVs. Lucid Air, an award-winning vehicle, was named Motor Trend's Car of the Year recently. The quality of that vehicle is really on par or superior to a Tesla product, which is just something that we haven't seen. While we think chip shortages and supply chain issues are going to continue to have a dramatic impact on both production and sales for the auto industry, we think both Ford and Lucid are better off than many of their competitors, for various reasons. Those are our two top picks in the industry heading into the new year. So we have a buy and a $135 12-month price target on Rivian.
So this leaves me wondering, for all those Tesla folks that are now shaking in their shoes when you, a pro, come on and say, Lucid is just the better electric vehicle. And you just said it just like that. Elon Musk has been selling a lot of shares. We went from 1,200 to less than 900. So are you implying that people maybe could take some Tesla gains and shares and sell some of those and buy Rivian or Lucid?
In today's video, I'm going to be reacting to some comments from one of the dumbest stock analysts on Wall Street, and that's really saying something. Garrett NFI Nelson today is recommending investors buy stock bargains like Ford, Rivian and Lucid, while simultaneously suggesting that you shouldn't be buying more Tesla stock. Of course, there's nothing personal here. I've never met Garrett and I'm sure he's a very lovely guy. However, if Garrett says something dumb, I'm going to call him out, and I'm also going to keep him accountable. So let's get into the video. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. So before we hear Garrett NFI Nelson self-immolate by claiming that Rivian, Lucid and Ford are better stocks to be buying today than Tesla, come back in a year or two, watch how this has aged, I'll barbecue him again. The guy's got no fucking idea and he should be embarrassed he's even saying these things. We're first going to rewind the clock just a couple of years, take a quick trip down memory lane and listen to some of the things that Garrett was saying about Tesla stock in 2019 and 2020, just a couple of years ago. In this first clip, Tesla stock was around $55 split adjusted with a market cap of around $45 billion. Less than Lucid's market cap today, despite Lucid having delivered about 69 vehicles in total and Tesla at the corresponding point in time having delivered hundreds upon hundreds of thousands. And that's right, Rivian's market cap today, the same time this muppet is recommending investors buy a Rivian, is about double where Tesla was at when he made these comments.
Anything surprising in this? Is it as exciting as previous rollouts for Elon Musk?
Well, we viewed the rollout as a bit of a disappointment. And what you saw for several days ahead of this unveiling was the stock trading higher. And what you're seeing now is a classic sell the news situation. What we thought was really disappointing, if you go back to Tesla's shareholder meeting last June, Elon Musk said that the Model Y would be unveiled about this time, but he said the first deliveries would occur in the first half of 2020.
Just jumping in here for a quick fact check. The first deliveries of Model Y occurred in March 2020. Now, I'm a bit of a moron, so I don't actually know if March is in the first half of the year, but if you guys and girls could help me out at home, was March in the first half of 2020? Did Tesla meet their target? Were they on time?
We think Tesla is going to be facing a lot more electric vehicle competition from the likes of Audi, Jaguar, BMW, Mercedes, and others, starting with the 2021 model year, which will first be available about this time next year. So those models will already be out by the time the first Model Y versions are available to consumers. The real problem they're facing, in our opinion, all goes back to the reduction in the federal electric vehicle tax credit, which stepped down from $7,500 to $3,750 on January 1st. Now that credit steps down again on July 1st and then will go away completely at the end of this year. And that's why, in our opinion, their sales have really dropped off significantly since the start of the year. And it's a headwind that they're going to be facing throughout this year and into next year. When the Model Y hits the market, there's going to be no federal electric vehicle tax credit.
Well, as we can see here, Garrett was absolutely right. I mean, Tesla vehicle deliveries have collapsed since he made those comments. There's been a huge decline in sales because the regulatory credit was faded out. Absolutely hit the nail on the head there, Garrett. Good call, mate.
Our main concern is regarding their operational guidance. So their guidance for the second quarter implies about a 50% increase in their vehicle sales from the first quarter, and we just don't see that happening.
Sorry to do this to you, Garrett, but as we can see, 2018, 245,000 vehicle deliveries. 2019, 367. Let's do some quick math. 245 times 50% equals 367,000. I mean, you couldn't be more perfect. Forecast 50% growth year over year. Hit the nail on the head, literally. I guess Garrett didn't see it happening, and then it did happen. Wonder if he changed his tune in the future as a result of being dead f***ing wrong about this.
So we think there's a lot of risk there still, and also have heightened concerns regarding competition. There are dozens of electric or partially electric vehicles set to hit the market, really starting with the 2021 model year, which is only really a few quarters away.
Mm-hmm. So, I mean, in terms of so you're just a skeptic as to whether or not they can ramp as quickly as they are forecasting they can ramp in terms of making those cars.
That's right.
You've got a question about whether or not the company can ramp to the forecast it gave in the latest quarter. At the same time, it sounds like you're skeptical about demand for this vehicle. So which really is the driving force here? Because if the company can't ramp as quickly, but the demand is not there, then you might have supply-demand more in balance.
That's right. And that's what you saw in the first quarter was a pretty big inventory build. And we think that continues. So we just don't see them hitting their shipment guidance either for the second quarter or for the full year.
So now let's see what Garrett had to say with Tesla stock less than $50 per share split adjusted a month or two later.
Garrett Nelson with us, also senior analyst at CFRA, has a sell rating on the stock, a price target 150.
We think this is an extremely demoralizing release for Tesla during a quarter in which they had record vehicle sales, record high vehicle sales. So you have to look at this and question what the path to profitability looks like for Tesla going forward if they can't generate a profit on record high sales.
Just for the record, Garrett had a $150 price target on Tesla stock at the time this went to air. That was pre-split. Split adjusted, $30 per share. And in terms of Tesla's path to profitability, also known as scale, let's see what actually happened. Here's what happened. Tesla increased the volumes of their vehicles, they continued to drive their costs down, and they became extremely profitable. This was something that even a moron like myself knew was right around the corner. As Tesla scales production, they start to benefit from operating leverage, and of course, as economies of scale, they can drive their costs down further. What do you know? They start printing money. It seems like Garrett doesn't have a great track record in predicting future outcomes relating to stocks and electric vehicles. I'm just saying.
Really, the next catalyst is the opening of their China factory, but the problem with China is auto manufacturers are notorious for struggling from a profitability standpoint over in China, and the China auto market from a demand standpoint has pretty much collapsed over the last year. So this isn't a pretty picture for Tesla.
Would this be a bad time to point out that not only is Tesla's Shanghai factory their most profitable, but they're dominating the electric vehicle market in China despite an incredible amount of local competition? So let's fast forward 12 months, a year after Garrett the Carrot famously said that Tesla stock was worth $150 per share, pre-split. Remember, that's $30 split adjusted. And we have Garrett appearing on CNBS with Tesla stock over $1,600 per share. Seems like his price target was off by a mere factor of 10. Let's see if he'd changed his tune and learned any lessons about his incredible, colossal error of judgment.
Our next guest says now is a good time to take some profits. By the way, Tesla's up 8.5% today to over $1,600 a share. CFRA senior equity analyst Garrett Nelson is looking for a $400 drop in the next 12 months. His target is only $1,100. You know, this shouldn't be a bold call, but it is. You know, going against the Tesla momentum has been a losing game. I think it's on the front page of the Wall Street Journal today, you know, talking to investors who go, I know it's run up too much, but I can't bear to part with it. What are the red flags that you see for the stock?
Sure. So we view this as a story stock that's had a very impressive run of positive news flow for several months now, but we're seeing some cracks in the story, and we think the shares have gotten ahead of those underlying fundamentals here.
So about 18 months later, Tesla stock closing at $1,067 per share on the most recent trading day in the stock market. You might be thinking, Garrett's starting to learn his lesson. 18 months ago, $1,100 per share price target, he's not off by that much. You forgot the Tesla stock split. That $1,100 per share price target split adjusted is $220 per share. Tesla stock looks like it'll be closing out the year about 5 times higher than Garrett the Carrot could ever have imagined.
For one, they recently lowered the price of their Model Y vehicle, which they just debuted in March. They're already lowering the price of that. Secondly, there's been a big drop in registrations for new Teslas reported in California, which is by far their largest market in the U.S. There's also been a lot of speculative buying, much of which has come from retail investors, which is never a good sign in our view. And then also the short interest has come down to only 7.5% of shares outstanding. A year ago, short interest was over 23%. So we think a lot of the recent move has been caused by a major short squeeze. They're also entering a major CapEx cycle. So their CapEx spending in each of the next 3 years will be about $3 billion, up from only $1.3 billion last year. So that's, in our view, is going to really act as a drag on free cash flow. And that's because they're building the new factories in Germany and then in the U.S. also. We think when those red flags become more apparent, this meteoric run-up kind of stops.
So with that extremely important context out of the way, hope you didn't skip ahead. We're now going to see what Garrett has to say about Lucid and Rivian, keeping in mind this is the same guy who thought Tesla was massively overvalued when it was worth less than either of these companies, despite having delivered hundreds of thousands of vehicles. In fact, at the tail end, in the most recent of those interviews, 18 months ago, when Tesla had delivered well in excess of 1 million vehicles, he thought Tesla was worth a mere $200 or so billion. And now Einstein is here to tell us that Rivian and Lucid, who've delivered, a little bit less than 1 million vehicles and don't have a burgeoning battery business, an unassailable lead in full self-driving data, incredible new innovations in manufacturing techniques, and haven't proven anything, they haven't even done anything, we're going to learn that, at least according to Garrett the Carrot, delivering actual products to actual customers doesn't really count for a whole lot. Because apparently, Rivian and Lucid deserve to be worth about half what Tesla was when they'd been delivering vehicles for a decade.
It's time now to talk about electric vehicles. We love this sector. Garrett Nelson's on with us pretty regularly, and we love each time he's on. Vice President, Equity Analyst at CFRA. Thank you so much for being on with us today. So I know you have buy ratings on Lucid and Ford being the more traditional player. As you look at 2022, you're holding on to both of those buys, right? You're not changing any calls on those, right? Why?
That's correct. While we think chip shortages and supply chain issues are going to continue to have a dramatic impact on both production and sales for the auto industry, we think both Ford and Lucid are better off than many of their competitors, for various reasons. Ford has really righted the ship from some of the operational issues that they experienced over the past several months in terms of the chip shortages. In fact, they cited a improvement in the availability of chip supply for the strength of their third quarter results. And then Lucid, just started producing EVs. The Lucid Air, an award-winning vehicle, was named Motor Trend's Car of the Year recently. They're only producing at a very small, manageable quantity where we don't think they're going to be as affected as some of the other larger auto manufacturers. In fact, the company's only planning on producing about 20,000 of those vehicles next year. So, those are our two top picks in the industry heading into the new year.
So, time for a little bit of accountability. Garrett currently has a $65 price target on Lucid stock, implying a little over a $100 billion valuation based on production of around 20,000 units next year. To give you guys some context, that's around the same volume of vehicles that Tesla produced all the way back in 2013. Their market cap was around $15 billion at the time. In 2019, when Tesla was producing almost 20 times that number of vehicles, almost 400,000 for the full year, this guy thought Tesla deserved a $30 billion market cap. Yet today, for some inexplicable reason, Garrett thinks that Lucid is worth over $100 billion based on production of 20,000 vehicles, when Tesla was only worth $30 billion on production of 367,000 vehicles. This guy has zero credibility. In fact, he has less than zero credibility.
So exciting. I mean, when you talk about Ford, and by the way, these are names that you've been talking about for some time here on the show as they continue to move higher. So you've been right on point with these calls. With Ford, I saw also that they are stopping to take orders at this point now because they have such a backlog of so many orders. Fantastic for the company, but they have to play a little bit of catch up there. And as far as Lucid, you just mentioned car of the year, which makes me think for 2022, truck of the year, car of the year, where do you think the features will be?
Yeah, so with Lucid, we think, since they received that honor, they've received a big increase in their reservation count. And so that really sets them well up in terms of a backlog looking beyond 2022. But, the quality of that vehicle is really on par or superior to a Tesla product, which is just something that we haven't seen in the industry up until now. When you're talking 1,100 plus horsepower and a single charge range of 520 miles, that is a superior electric vehicle, and that's why it was named Car of the Year. So, another name that we like, we actually just upgraded last week, following a big sell-off since mid-November, is Rivian. So we have a buy and a $135 12-month price target on Rivian. Their vehicle, the R1T, was named Motor Trend's Truck of the Year just in the last couple weeks. So, that's another new player in the EV space that we've turned bullish on.
I was going to ask you, and that was one of the questions why I was saying Truck of the Year, because it's notoriously Ford's F-Series, and with the excitement and the orders that are backing up here for Ford, it's interesting that you brought up the Rivian story. Now, something that was in your notes is that Rivian will face some chip challenges because of the multiple types of production that they do. I think you were saying 3 different types, but you still have a higher price point for your price target.
That's right. So Rivian has the R1T, and then they're just starting to produce the R1S, which is an electric SUV. And then they have the electric delivery van supply agreement with Amazon, which are also just getting on roads right now. So simultaneously, they'll be producing those 3 vehicles from their single factory located in Illinois. So it presents a bit more of a logistical challenge, we think, for a factory that's just starting up. But they do have very strong demand for all 3 of those vehicles, and we think they're going to do just fine. And the stock's had a really nice pullback since mid-November, and we think this is a good entry point here.
Good entry point for Rivian. So this leaves me wondering, for all those Tesla folks that are now shaking in their shoes when you, a pro, come on and say, Lucid is just the better electric vehicle. And you just said it just like that. Elon Musk has been selling a lot of shares. We went from 1,200 to less than 900. So are you implying that people maybe could take some Tesla gains and shares and sell some of those and buy Rivian or Lucid? Would you get out of Tesla?
Recommendation is a hold on Tesla right now. It's come back here pretty close to our price target, which is $875. The thing that Tesla does have going for them in the new year is they have these 2 new gigantic factories, which will be starting up at about the same time, one in Texas and the other in Germany. So, however, you're not going to see a new model from Tesla until late 2022 when they start to produce the Cybertruck. So, they will have their work cut out in terms of getting those 2 new plants up and running and ramped up to full capacity as fast as the demand will allow for.
Thumbs up, thumbs down, Tesla smartphone? Is that something real?
We haven't run any models on the smartphone, but they have a long
Okay, we'll
history
watch.
of innovation, wouldn't rule anything out.
So I think I figured out Garrett's methodology for valuing an electric vehicle company. If the company has delivered a single product to a single customer, and if Motor Trend has said their car's kind of cool, it doesn't really matter what it's selling for or whether or not they're making a profit on those vehicles sold, and the company has also made some projections for future volumes of vehicles produced, they are automatically worth 20% of what Tesla's worth. Now, don't get me wrong. 1, I wish these companies well. Rivian and Lucid, it'd be great if they're successful. 2, anything can happen to the stock price. In fact, these calls from Garrett may be absolutely genius in the context of the stock market. Rivian and Lucid could still continue to grow even though the valuations of these companies are absolutely f***ing insane. But there is no denying Garrett has absolutely no credibility. If we look at his historical predictions about what Tesla stock was worth based on where the company was at versus what he's saying companies like Rivian and Lucid are worth and their respective stocks, it just doesn't add up. I almost get the feeling that Garrett, like many of the retail investors out there who, I don't know, thought Nikola was a great investment, is suffering from some strange form of Tesla success-induced delusion where, oh, Tesla did it, therefore everyone else will automatically succeed to at least the same level. Volume production's not hard, and almost feels like, you know what, I missed out on Tesla, I look like a fucking moron, I don't want to miss out on the next Tesla, so I'm just going to start recommending investors buy every EV company on the planet who's delivered at least one vehicle. I don't think this is going to age well. I hope I'm wrong, I hope Rivian and Lucid are super successful, but I do want to underscore one final point. Based on their valuations today and their total lack of track records and the mountains they need to climb, I personally think that the people who think they're investing in Rivian stock, Lucid stock, Ford stock, etc. are not investing, they're gambling. And there's nothing wrong with that, as long as you acknowledge that's what you're doing. Let me know your thoughts in the comments below. Do you own Rivian stock, Lucid stock? Do you think they're undervalued, overvalued? Do you think they'll be successful? Will they reach their production targets? Will they go bankrupt? Let me know your thoughts below. And happy holidays. See you guys in the next video. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.